Hello, 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 hello. How is everybody doing today? Hope everybody's having a wonderful day. Really excited to be here today. And we're going to be talking about dividend paying ETFs. Now, in this video, I just want to focus on two ETFs. One is going to be a new one that I'm really gung ho about. And then the other one is the more traditional one that a lot of people know. So we're going to do a side-by-side comparison and actually see, had you bought one of the other, right, a year ago, where would you be today? And the traditional stock that I'm talking about, the traditional ETF that I'm talking about is VOO. What's up, Bo Charles? How you doing? It's good to have folks joining in on this live, and feel free to drop some comments throughout the video. But like I said, I'm going to be talking about VOO, and I'm going to compare it to MSTY, which is a dividend-paying ETF, and it's a yield max product, and it only tracks one asset, which is the stock MicroStrategy. So I'm going to share my screen, and we're going to go through it real quick, and we'll start off by looking at VOO. A lot of you guys know VOO, and we're just going to look into some key data. So VOO, as you know, it is a ETF that tracks the S&P 500, right? It's the Vanguard S&P 500 ETF. Right now, it's going for about $550 for $546 to be exact. So it's pretty on the expensive side, right, if you think about it. But what I love about VOO is that it's been really, really consistent, right? And if you come down and you look into the data, you can see that VOO has been around for quite some time, right? It started out, I think, about 15 years ago. I'm going to scroll down to the inception date, 2010. So it's been around for quite some time. It's been around for 15 years, delivered really good, solid dividends and returns for investors. And it's been a really solid player in the stock market. I have a ton of VOO, but as I've been looking into VOO and other cash flowing vehicles, it made me rethink my strategy a little bit. So let's take a look at the dividend yield for VOO. So over the last 12 months, VOO has only delivered $7 per share in dividend. Okay. And I'm going to showcase the dividend information right now on VOO. But VOO has only delivered $7 in dividend per share. Like, their dividend yield has been very, very low. As you can see over here, 1.28% is their dividend yield. They've delivered about $7 over the past year. So not really, really strong. If you take a look at some of their key holdings, their highest holding is Apple. They have Microsoft, NVIDIA. So most of your usual suspects from the Mag 7 portfolio, but they also do have Warren Buffett's company, Broadcom, Eli Lilly, JP Morgan, Visa, Netflix as part of their top 15. But like I mentioned, from a dividend perspective, their dividend yield hasn't been strong. Now let's take a look at YieldMax, the MSTY product from YieldMax. So this is an ETF that I have been gung-ho about. And I'm going to explain to you why I love it. It's a fairly new product. It's been around for slightly over a year. So a lot of people don't know about it. And part of the reason why I'm doing this video or these series of videos is I want to be introducing to you guys these types of assets that maybe your financial advisor hasn't told you about, or maybe you haven't stumbled upon it in your research. But these are really good cash flowing assets that you might want to consider to add into your portfolio, just given the times we're in. So take a look at this one. Cost relatively affordable, right? $23. A year ago, when it started, it was around 30. So it has depreciated, but it's only about $7 that it's dropped, so it's not that bad. But I want you to pay attention to their dividend history. So had you bought one MSTY share a year ago, you would have received $30 in dividend over the last 12 months. I want you to think about that for a minute. So you'd have bought the stock, this ETF, for about $30 or within that range. And within 12 months, they would have paid you over 100% of what you paid to buy the stock. Because if you take a look at their dividend yield is 132%, meaning that in a 12-month window, you would have received more in dividend than what you paid to buy the asset. So we're going to go through an example where if you had bought one share of VOO versus one share of MSTY, where would you be from a profitability perspective? So we're going to dive into the charts real quick, and we will start off with VOO. So with VOO about a year ago, as you can see, it was going around 480, 478, 480 range, right? And then today, obviously, it's going at 546. So there's been definitely a lot of appreciation over the past 12 months, but the dividend hasn't been strong. With MSTY, about 12 months ago, it was going around $30, $29, $30, and now it's going for 22. But it does have a strong appreciation. It does have a strong dividend yield. So the dividend has been good. So let's dive into the numbers. So what I did is I consulted ChatGPT and I put in a scenario where on May 13th, if you had purchased one share of VOO, it would have been 478. It would have meant that by May 13th, a few days ago, you would have had a capital gain of $62 just in the share. And also, you would have made the $7 in dividend yield, meaning that your total return on that investment would have been close to $70, give or take. However, every ETF has an expense ratio, and VOO has a very low expense ratio at 0.03%. So you'd have had to pay about 15 cents for that particular expense ratio. Now, your total return for VOO would have been about 14%. Not bad, within the double digits, more than 10%, but it's not strong, right? Now, let's take a look if you had invested the same amount of money in MSTY, right? So here's MSTY. On May 30th, 2024, it was going for $30, 14 cents. The price has dropped to around the $23 range, right? Had you used the same amount of money that you'd have used to buy VOO, to buy your MSTY stock, you'd have had almost 16 shares. Those 16 shares would have yielded $30 in dividends per share over the 12-month period, meaning you would have collected $478 in dividend in that 12-month period. And you still own the shares, right? That's the beautiful part. But we've seen about $6.50 in your capital depreciation, meaning that you'd have lost about $100 just in the value of your position. And it has a high expense ratio at 0.99%. So you'd have paid about $5 in the expense ratio. So now when you look into the loss you'd have paid plus the dividend and also deducting your expense ratio, you would have made $370 just by owning MSTY, which would have been a 78% return. So if we do a side-by-side comparison so that you really see how it looks like, had you used $478, you'd have only made 14%. But had you used that same $478 to buy MSTY, you'd have made 78%. So for me, it's quite clear that I think, given the times, focusing on dividend paying stocks like MSTY, and I have a whole list of similar type of assets that you can take a look at, is probably the right thing to do right now. And with MSTY, if you actually read up about them, they just focus on MicroStrategy, and MicroStrategy is a company that focuses on buying Bitcoin. So whenever you see Bitcoin rise, you're actually going to see. And the other interesting thing, if you look into their yield history, the most recent dividend announcement that they announced was almost $2 per share on this is actually VO. Let me go to MSTY. The most dividend, and this was on the 8th of May. So this is quite a strong that we're looking at here. So the long and short to assets that can actually deliver a strong cash flow. And the Yield Max portfolio has 43 ETFs similar to MSTY that you could invest in. And they focus on a lot of, that is the MSTY equivalent for Tesla. They have one for Palantir, PLTY. That's another monthly dividend paying ETF that you can look at. They have one for Coinbase, CONY. And the one for Coinbase actually has a much higher dividend yield percentage than the one that I just shared with MSTY, right? So in times like this, where there's a lot of uncertainty with tariffs, we have these trade wars going on, with a potential recession, like that word has been used, we don't really know what's happening. For me personally, cash flow is king. So I'm focusing on shifting a lot of my portfolio towards cash flow producing assets. I am not a financial advisor, so everything that I'm sharing with you is just for educational purposes. Feel free to a financial advisor to at least guide you how to navigate these times based on your goals, your time horizon, and your risk profile. But as for me, just given the times, I think looking into cash producing assets like these monthly dividend paying stocks like MSTY is probably the right thing to do, because if you can generate a lot of cash in a short period of time, what you could then do is you could use those dividend payouts that you're getting from MSTY to then invest in your normal shares, like the shares that you want to be buying for the long term. So anyway, that is what I wanted to share with you guys, that I think right now at this very moment, MSTY and some of the other Yield Max portfolio ETFs that you can look into if you're looking for cash flow. And again, I just did a side-by-side analysis from one of the top ETFs out there, which is VOO. It tracks the S&P 500. And then we also looked at MSTY, and we saw that MSTY outperformed VOO by like a crazy amount, right? So the numbers are there. They were there for you guys to see. So it's really quite clear which way to go. So yes, Regina says I need to go ahead and add these to my portfolio. Yeah, like definitely add these to your portfolio if you think it's the right thing for you to do. But you can even see in the community, Regina, Fatima took action, and she already collected dividend, her first dividend payout, and she actually went in and added more into her position because she saw that, like, hey, if I was able to add more into my position, I could be actually collecting more dividend payouts. So right now, like I said, you can literally build out your portfolio in a manner where you can say, like, okay, I want to make $5,000 in dividend payouts each month. So on average, if you look at the dividend payouts, and I'll share my screen again so you guys can see. Sterling, what's good, my man? So that you guys can see. Take a look at some of the average payouts here, right? So May 8th, MSTY, they gave out $2.37 per share. So imagine if you have 1,000 shares of MSTY, that's a payout of $2,300 that you're just getting per month, right? If you have 2,000 shares, you're looking at $4,600 in a payout. That's like going to work. So what you could essentially do now is you could build a strategy around how much money do I want to make monthly so that I could be financially free. And you can build your position in a manner that if you have, let's say, 5,000 shares of MSTY, and it's paying you an average of anywhere between $1.50 to $2, you could be making anywhere from $5,000 to $10,000 in dividend income per month. And that's money that you could actually live off of, right? So how often do they pay out? MSTY pays out monthly, Bo. So you can see, here's the payout for May. Here's the payout for April. Here's the payout for March. Here's the payout for February. Here's the payout for January. So MSTY, in fact, the whole yield max portfolio, they pay monthly. Whereas with VOO, right, they pay out quarterly. So not only is VOO paying you a smaller dividend yield, they're paying you every 3 months. The yield max portfolio is paying you monthly, and they're paying you a higher dividend portfolio. Now, a lot of you guys know that I'm an options trader, right? So I trade options mainly. And by the way, the yield max portfolio, their core strategy is options trading. So they actually trade options contracts of the assets that they are focused on. So with MSTY, what they're actually doing is they're trading options contracts for MSTR. So anyway, as an options trader, what I do is just some game for you guys is I actually just use the profits I'm making from my options trade to then purchase position on these monthly dividend paying stocks. So for example, on Monday, I take a trade on SPY or SPX. I make a few $100s. I then take that few $100s and maybe 10 shares of MSTY. Tomorrow, if I do the same thing, I buy another 10, 20 shares of MSTY, and by the end of the week, if you're, consistently taking good moves, consistently profit, you can find yourself having just secured a really solid base of stocks for those paying ETFs. And what then that does now is that it means that the profits that I made when I traded options is also going to just generate more profit for me now each month from the monthly dividend income that I'm going to be getting from the ETFs that I've bought. So the whole thought process is to always be thinking about how do I continuously multiply my money, right? Because that is what you need to do if you want to be wealthy financially, right? You want to be thinking about, okay, I made $100 from my 9 to 5. Let me learn how to trade. So if you know how to day trade, you can trade options, multiply that $100 to 200. Take the $100 profit, buy your position on MSTY, and guess what? Within a couple of weeks, you're going to get your monthly dividend payout. And now that monthly dividend payout is more money that you could reinvest, and you continuing to multiply the seed you got from your 9 to 5. So the money you make from your 9 to 5, you need to look at it as a seed. This is your seed to build your orchard. So you take a portion of what you're making from your 9 to 5, you go into the market, you multiply it by trading options, you take some of those profits to then invest in these monthly paying dividend stocks, and now you can get this passive income that's just coming into your portfolio. And you can set it up in a way that the dividend payouts could be reinvested to buy more asset, or if you want, you can actually just collect the cash and then you decide what you want to do with the cash. So do you guys have any questions? I know that there are a bunch of people who are here on live. Nightly, welcome. Thank you so much. Bo, I answered your question about the payouts. Sterling, Regina, do you guys have any questions? Because I want to answer any live questions that we have right now. And if there are no more questions, this week I want to turn this into weekly, where I can just come in and share some of the strategies or some stuff that I'm looking at and that I'm playing, so that I can continue to educate people on potential things that you could be doing in the market. I don't see any questions, so I think we're all set. So again, thank you so much, guys, for jumping in. This is my very first YouTube live, so I'm very blessed to have a few people joined right now. And like I said, right now, what I have as a strategy is I'm focusing on cash flowing ETFs. And when I say cash flowing ETFs, I'm mainly specifically talking about the yield max portfolio. They pay monthly dividends, and they have a very strong yield. So next Sunday, I'm going to talk about 3 of my favorite. So I won't talk about MSTY. We covered it today, but there are 3 others that I love within the yield max portfolio that I'm going to focus on next week, that I'm going to share with you guys. So same time, 9 p.m. Eastern Standard Time, we're going to dive into 3 ETFs that I like from the yield max portfolio. So come with your pen, your papers ready, and any of the questions. And what I would actually want to challenge you guys who are watching the video, either live or as the recording, is for you to actually take action. So I've told you about this. So now the ball is in your court to now take action, to either do more research, and if it actually fits your strategy, your investment strategy, take action. Go buy the shares and collect the dividend payouts. So stay blessed, buy the best. I'll see you guys soon. Take care.